Hello, everyone. Welcome back to Crypto Crayfish. Today, we're going to talk about the state of the market, the mass fear going on right now, and how I've been nailing the calls in the last 3-4 weeks. If you have been looking for what's next, this channel has been a great spot for it. If you have any doubts, I want you to go watch my last short on the channel. It was on this Saturday, which was today's Monday, the 10th. So it was on the 8th. And I said, Bitcoin is coiling. Usually there's a strong move in either direction. I said, beware, tomorrow's Sunday. And we got a move from 85 down to 79 on Sunday. And now I thought it was a apt time to do a video because we were just breaking below 77K, which is new lows. So that's fun. Let's go look. We're live, which is pretty rare that we catch it live. And I can show you the nice little monthly so you can actually see the new lows here. And you can see right there, we've taken out this wick. Previous low was 78. That was not the low, as many people on Twitter were calling. On this channel, we called that it could very easily back test the highs from this summer consolidation, right? So if you watch this channel, right around this 72 to 74 mark, even the low 70s, especially if it's a wick, wouldn't be too surprising, or even high 60s. And it looks like we're headed that direction. So I do think this is a really nice risk to reward area. I think it's a really good place to load up. And I'm definitely interested in that. And did some buying today. Let's talk about the broader picture. So, if you're newer to Bitcoin, this probably feels terrifying, right? And I'm not going to lie, it hasn't been a fun few weeks. I'm not super relaxed, but I'm learning. I've very much learned over the years to enjoy the bloody days in the market, because this is where you make your gains. When you buy on days where everyone is calling for, the market cycle's over, we're getting a recession, Trump's going to crash the economy, tariffs are going to destroy the world ecosystem, all this stuff, right? When you buy, when there's that peak fear, it might not be the local bottom, frankly. You could have bought Friday or Thursday last week, and it was quite bloody. And today was just way more gnarly, right? The NASDAQ was down, almost 4% today? Yeah, almost 4%. At one point during the day, it was down over 4.5% on the day, right? And this has been an aggressive sell. Like, this is almost just a vertical channel straight down. Let's just look at the measured move here. Usually the stock market doesn't move this quick, guys. So this is something to pay attention to. And actually, I think it's probably a good thing. If it was more entrenched weakness, I think you'd see more gradual drops versus this. It's come on suddenly. It's only been about 90 bars since the high, which was on February 20th. So it's only been about 20 days, 3 weeks, and we're down 13.5% on the NASDAQ. Okay, that's a big move. That's really aggressive. And usually the stock market doesn't do that. And I think what this means is you can often get a nice recovery out of it if we get some good news, right? And that's a big if. Obviously, no one knows what's going on with tariffs, what it's going to look like. But just, if we want to look back in history at other times that were potentially a little bit like this really took a longer period of time, so it wasn't as comparable. You have the 2021 bear market, right, which we got a pretty aggressive first candle, down 8.5%. This one's currently down 7%. So it could be something like this. This one is down 5%. If you go back to farther in history, this one was a nice little almost 6% the first week, and then 7% the next. Or are these monthlies? Let's see. These are monthlies. Yep, so 6% the first month, and nice little 7.5% this next month. And then boom, ripped your face off, right? And that was during COVID. That's early 2020 right there. And we got this move. And we can measure the whole length of that guy. That was 30%, right? From wick to wick. But if you just take the candle bodies, we're looking at right around 15%. Let's look where we're at right now. If we take the candle bodies, we're at about 8.5. And do I think this news is nearly as bad as COVID? No, I don't. I don't think it's going to have that level of economic issues, and I think it could be short-lived. But that's also hope. As far as the data, right? We're interested in data in this channel. We're interested in following, reacting to the market rather than predicting it. Looking at this Bitcoin market, right? We talked about this a little bit last time. We really want to hold the 70s, guys. If we go below the 70s, right? If you start testing this trend line, which is the lower highs trend line, okay? If you back test this right now by going to, 60, not a good sign. Probably means that the cycle top is in, but we'll probably get a big bounce before that happens, right? So it's not just going to go monotonically to zero. We'd probably get a bounce back to like 90K, and then really struggle. That's not my base case. Frankly, I think it's more likely we hold the 70s. We can, again, wick potentially into the 60s, but we need those weekly candle closes above 72K. And I think this is your best risk to reward. If we get that signal that it's going lower, then you exit on the pump to 90 or 80 or whatever it is, and we can talk about that in the channel. But again, I think this is more likely, let me show you in history, something similar to, let's go look at the 2021 cycle for you. I think you're looking at something more similar to this move right here. Okay, so this was kind of similar time frame. This was January into February. And wick to wick, that was that was right around a 30% correction. And the nice part about this one is they did it quick and dirty. It was done, 32%, like that. And then onward they went. This one, has been a little bit slower. So it's taking a little bit more time. But where are we at right now? We have seen currently new lows, right? A 29% correction. Okay? So it's literally about the exact same. And frankly, to go down to 72 would take you right around that 32%. Okay, so it's almost exactly what we saw back here. Similar time frame, delayed about 2 months, and then we got this blow off top into April and May. Okay, and then we had the summer low, where we actually retested the same lows that we would be putting in right now, and then we went up again into the end of the year. Now that's a double peak scenario. That's not necessarily what's most common. We can look at the 2017 cycle to get an idea of this. This is more of a single peak classic scenario, And I would say we are most similar to. So this is 2017, right? Which is the post-halving year. So we are in what would be early 2017. And this chart's crazy because it's so exponential. That cycle was just so volatile because it was newer in Bitcoin's history. But if you go back to right here, right, we had a mini correction in January to the tune of dun, 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 34%. And then we got to move up. And then we actually got another one exactly in this time period right now, right? Early March, second week of March, the one we're in right now, big red candle. Third week of March, little red candle with a wick lower. Possible we do that? For sure. And this one is right around 35%. Okay? So they're all pretty similar. It's something that we've done many times in the past. And it's something that is pretty normal during this section of a bull market. Okay? Again, where it becomes abnormal is if it breaks below the consolidation level. So, to give you the example from, let's go to the example from 2017 here. Again, we're going to have to zoom in to Timbuktu because this is a crazy chart. You can see that we got this like from June all the way to November, really, consolidation. Yeah, everyone see that? And that, the high of that was right around here, $769. Yes, I know that's painful to hear. We are literally at, right now we just hit 76.9. So we are literally, let's see how many zeros, 2 zeros. So 100-fold. We are 100x that price right now. So again, sometimes it's helpful to zoom out. But the point of this, right? We put in this high. We got this longer consolidation that took till December. So June to December is roughly about 6 months. We broke out, and then we retested aggressively that high that we broke out from. Okay? And we actually got a little bit of a wick below it. But again, the weekly candle close was above it. Okay? And then we went on our merry way. So that is what we are looking for, guys. That's the bullish scenario. And that is not invalidated if we go to, say, 72K. Say we go to 69K. It's not necessarily invalidated. So I would have a plan. I would have cash on hand. And I would be ready to take advantage of the fear while it looks like normal fear. If we get that break below, then we'll start talking about, okay, maybe it's time to exit a little bit early. Maybe there is something more to come, but I don't think we're in that phase yet, despite all the fear that people are talking about. If you don't know what I'm talking about with all the fear, let's go to the crypto fear and greed. Because this has been printing some of the lowest levels in history, guys. It's pretty interesting. Actually, I'll go over here. This is probably a better place to look at it. And we go to the Fear and Greed Index. Hopefully you all can see this. This is color-coded by price. And you can go back to some of the gnarly periods, right? Like, here's COVID. Lowest we hit was 9. Okay? That was the absolute low in COVID. Over here, our last bear market, we hit 6. Okay? What are we at right now, you might ask? Okay, well, we just printed a 20. Okay? And actually, we printed, see back here? We printed a 10 on February 27th. Okay? So lower than the lowest value we got to in mid-COVID. Right? that shows you how gnarly of a reset this has been for both stocks and crypto, to be frank. Stocks are also at peak fear when compared by data to the crash in COVID, right? So these are the areas when you want to be buying, right? Just look at this chart. Are the green areas when you want to be buying? No. Sometimes it worked out, right? You could have bought down here in extreme greed and it could have kept going. But you also could have bought, here, extreme greed. And then you got 6 to 9 months of just generally down. You could have bought here. And then you got aggressive bear market. Okay? The goal of this channel is to really prevent me and prevent you from doing that. And we're going to do that together. Not financial advice, but you'll be able to watch what I do and hopefully do better than me because you'll learn from my mistakes. So if that sounds interesting to you, hit that subscribe button below. I'm trying to grow the channel and, trying to get people excited about crypto. I want to hear personal stories. And the perks of being a small channel, I have time for subscribers. I can talk to you. We can chat about markets, all those types of things. If you're interested in that, just leave something in the comments below. All right, so we just talked about fear and greed, right? We're at 10, or at least we were about a week ago. That shows you how brutal this drawdown has been, right? There are a lot of new people in the space who have no idea what is happening, and they are losing their hats to crypto. That's what you want, right? Remember, investing is transferring money from one participant to another participant. Okay? If you are going to succeed in investing, you are going to take that money from someone else. Ideally, it's hedge funds, the big guys, whoever. But at the end of the day, you need to, when people are offering their shares of things at a lower price, that's when you take advantage. And I'm not saying this is the absolute low, but I am saying that generally that's how market sentiment works. You buy during extreme fear and you sell during extreme greed. Okay? So that's important to know. I will say we did just drop under the bull market support band. If you're not aware of what this is, it's a band that, price often respects, especially in bull markets. And you can see, again, I'm going to go back to our last bull market because I think it's a nice little scenario. And you can see, so we got this interesting kind of phase where, I'm actually going to reset here. Here we go. This is what we want. This starts from the bear market to the highs. All right, so here's the bear market. We get this initial pump, which arguably is what we got in March. You get this larger consolidation, and you can see it kind of loses. Well, I think you can look at it a bunch of different ways, but you can see that it gets this pump and then loses the bull market support band for a temporary amount of time. Okay, this is arguably what we had happen this past summer, right? So if you look here, we lost the bull market support band. We used it as resistance for a few times. That's what happened there. Okay, then, wow, that's way too zoomed in. Okay, then, right, after the consolidation where we use it as resistance, we get this break. Okay? And this break, this was January. It broke out of the bull market support band. We got some highs in early February, and then it fell back below in early March. Okay? Just remember those things. Let's see if this sounds familiar. Right now, we get the breakout in, sorry, let's do the zoom a little bit better. Okay, so using it as resistance, we get this breakout of the bull market support band, and it's about a few months earlier, right? Rather than January, it's October this time. We go, and then look what we're doing, right? And the time scales don't necessarily have to be exact because, remember, cycles take longer and longer as we get diminishing returns. But we get that breakout, okay? And look at this high. right near the end of January, early February. Look at this breakdown below the bull market support band. Beginning of March. Okay? It's rhyming. And if you want to know what happened next, yes, this was a pandemic. I'm not saying we're in a pandemic, but I am saying, especially based on the fear and greed, this is a pretty aggressive sell-off that compares to a short-lived, very quick de-risking in the markets. Okay? So in that way, it's pretty similar to this COVID crash. We had this aggressive crash, and then we slowly worked our way out. We crossed back above the bull market support band by April, and we were on our way to new highs. Now, remember, this took years after that point to fully get the blow off top. We don't have years, right? We've already used a bunch of our time. So I don't think that the time will necessarily play out the same way, but I do think the structure looks similar in a lot of ways, right? Like, even zoomed out, you can see, from the high in March, or from the high, the mid-cycle peak, you get this consolidation, false breakout, correction back under, real breakout, continue on to the top. Okay? Now let's look at this one. I'll take it from the peak as well. This is from mid-cycle peak. We get that consolidation, breakout below it. We get that false breakout. We're currently in the snapback below it. And then you get the real breakout, the hold, and the on to new highs. So that's what I believe is most likely, guys. But again, you got to have the strength to fulfill your plans, whatever they are, now. I wore this shirt to prove that I am doing so. It's got a bunch of holes in it. It's because I've sold everything I have to buy Bitcoin, right? This is all I've got left. I jest. That is a joke. It is not real, but it does represent a little bit of the mentality of, you shouldn't be all in. You shouldn't be betting money that you don't have to lose. But at the same time, if you've got money that you've earmarked for Bitcoin or for crypto, and we're in peak fear and now you're not willing to put that money in, that's the market trap, right? That's what you need to decide when things are good. Okay, how much money would I put when things were bad? When things are bad, you need to execute that, right? And then when things are good again, when you're in that bear market phase, so right now, I want you to imagine prices at 120K, 140K, 150K, okay? I think all those are reasonable possible tops for this cycle. I'm not a crazy person who believes that, Bitcoin's going to 500K this cycle. Frankly, there's not enough liquidity for that, guys. And we can talk about that in detail if you want to in a future video. Just let me know. So anyway, imagine it at 120, 140, 150, okay? And develop your plan for those values now, right? Because I can tell you, I don't know what exact prices it will turn around, but I can tell you we will get extreme greed again. I can't tell you when, but it will happen. And likely it will happen sooner rather than later, considering this is a post-halving year, right? This is when Bitcoin traditionally gets the most extreme greed, okay? So that's what I would say to you. Think of those plans now, have those ideas, and start to really put those pieces into place as you execute, okay? As far as the stock market, it's been a pretty crazy drop. I hope that we get some good news. I think it could still be a few weeks for this to iron out. We've got inflation data on Wednesday, and I will keep you posted. But again, go check out my short to see how good my short-term analysis has been, guys. That's not my strength, to be honest, but I have been in tune with this market and really feeling good on those calls. So I will continue to put out those shorts so that you can know kind of what I'm seeing for the short term, and that way you can be as informed as possible. Hopefully you enjoyed the video. I appreciate your support, and we'll talk to you soon.